accrued to an individual outside India is taxable in India depends upon the residential status of the individual in India.
Okay, who is reading?
Sir Pratishtha.
Pratishtha. Okay, fine. So the first slide talks about residential status and its effect of tax incidence. So tax incidence on assessee depends on his residential status. So whosoever has not muted, so please mute your slide, except Pratisha can remain unmuted. So for instance, whether an income accrued to an individual outside India is taxable in India depends upon the status of an individual. You know, if you earn, you can earn income abroad as well as in India. So income accrued means income earning. Accrued means whether you have, earn income or not. Okay, fine. Do you know the accrual concept? All of you, what is accrual concept? Have you heard about accrual concept? Say yes or no.
Yes, sir. Yes.
Okay. So anyway, I'm going to explain that later on. So, but accrual means if you have made a sale, but you haven't received the money. So if you have made a sale, it will be treated as that the money is going to come to you. So it is recorded on an accrual basis. Okay. So whether you have received the money or not doesn't mean that you have received the income or not. If it has become due to you, it is accrued to you. Okay. For instance, whether an income accrued to an individual outside India is taxable in India depends upon the residential status of the individual. Okay, can you read further?
Similarly, whether an income earned by a foreign national in India or outside India is taxable in India depends on the residential status of the individual rather than on his citizenship. Therefore, the determination of the residential status of a person is very significant in order to find out his tax liability.
So, it is irrespective whether you are a foreign national or a citizen of India, whether the income is earned by a foreign national in India or even outside is taxable in India depends upon the residential status of the individual rather than his citizenship. So, even an American or person from UK can be taxed in India. It's not only the Indian citizens are taxed only for the income what they earn. So, therefore, it is very important to understand the residential status. So residential status is basically a term which is coined by the Income Tax Act. Okay. So we not look at, whether you are a foreign citizen or Indian citizen, we look at what is your residential status as per the income tax, and soon we'll understand how it has been defined. Okay. So yeah.
It is important for the income tax department to determine the residential status of a tax-paying individual or company. It becomes particularly relevant during the tax filing season. In fact, this is one of the factors based on which a person's taxability is decided.
So basically, here in this lecture, we're going to understand the residential status, the definition, and how do we determine that, and then which are the scope of income. What are the incomes which will be coming under, under the taxation ambit of an individual, depending upon his status. Okay.
The taxability of an individual in India depends upon his residential status in India for any particular financial year. The term residential status has been coined under the income tax laws of India and must not be confused with an individual's citizenship in India.
So basically, residential status and citizenships are totally different two terms, whereas the residential status has been defined under the income tax. Okay.
An individual may be a citizen of India but may end up being a non-resident for a particular year. Similarly, a foreign citizen may end up being a resident of India for income tax purposes for a particular year. Also to note that the residential status of different type of persons with an individual, a firm, a company, etc. is determined.
So basically, even an Indian citizen can become a non-resident. Okay. Similarly, a foreign citizen can become a resident in India. And then, apart from the individuals, we have to look for the rent status of, company, individual, firm, any kind of a, business organization will have a status. Okay. So it has been defined under the income tax. So we'll understand that. Okay.
For the purpose of income tax in India, the income tax laws in India classifies taxable person as a resident, a resident, not ordinarily resident, a non-resident.
Okay. So basically, for individuals particularly, or maybe for some other assessees also, there are three kinds of, status. Either you are a resident or you are a non-resident. Of course, these are two, but within resident, you can be either a resident, a normal resident, or a resident not ordinary resident. So there are three kinds of status which we have to determine. Either a person can be a resident or a person can be non-resident. The third category is a resident but not ordinary resident. Okay, so you must understand, and it has been called a RNOR, which means resident but not ordinary resident. So there are three categories of residents. Okay, of course there are some more which has been introduced in the very recently, but these are the three most important ones, and you must remember them. Okay.
Sir, whom do we call RNOR?
So we'll understand, because there is a definition of R and OR. So unless we go forward and understand, the definition of all the three terms, we can't just, make out anything. So let's just
Sure.
wait for it and we'll understand that. Okay.
Okay, sir.
Okay.
How to determine residential status. The taxability differs for each of the above categories of taxpayers. Before we get into taxability, let us first understand how a taxpayer becomes a resident, an RNOR or an NR.
So that means, we must understand how, how a person becomes a resident, and, not ordinary resident or non-resident. So NR stands for non-resident, RNOR is resident but not ordinary resident. So these are the three kinds of status which are possible. So now the most important one, so please focus for your understanding about the quiz and understanding the whole, subject itself. So section 6.1. There are about section 6, 7, 8 and 9 which are covered under this ambit of residential status. Okay, section 6.1, very important, just read it.
Section 6.1, resident. A taxpayer would qualify as a resident of India if he satisfies one of the following two conditions.
Okay.
A. Stay in India for a year is 182 days or more, or
So now the first condition, so he has to satisfy any one condition. If he satisfies any one of the following two conditions. So first condition is that if you have been in India for 182 days or more in the previous year. So I believe, everyone, here who are attending and myself, we have been all there almost like 182 days or more in India itself. Okay. Anybody who has not been there in India for more than 182 days in the last year or this year, 2023-24, which is just concluded, so that becomes your previous year. So I think most of you, maybe all of you, were there in India. So by this, so we have to satisfy even only one condition to become the resident. So I'll presume that we are all residents of India as per this definition. Second,
B. Stay in India for the immediately 4 preceding years is 365 days or more and 60 days or more in the relevant financial year.
okay, so that means, if suppose somebody was not there in India, okay, last year. For example, I was most of the time I was, in England, okay. So stay in India for more than 182 days. So now the second condition I have to look. Stay in India for immediately preceding 4 years is 365 days. In the last 4 preceding years, if I was there in India for 365 days, okay, or more, and 60 days or more in the relevant financial year. So that means in the previous financial year, that is, which is just concluded, which is 2003-2004, if I was there for more than 60 days in India, and then 4 preceding financial years, I was there for more than 365 days, then also, I will be considered as resident. So in case I have to satisfy either A or B to become a resident of India. Most of us will become resident of India by the, clause A, but in case somebody was not there, has spent more time abroad, but then we'll look at the second condition. We just, ignore the last financial year, but we go back to the, other financial years, 4 preceding financial years. So in 4 preceding financial years, if we were there for more than 365 days, and the last financial year, then we should have been at least for 60 days or more. So then we'll become a resident. So then the period of last financial year will be reduced to 60 days or more instead of 182 days. And prior to the last financial year, we should have been there in India for 365 days. I hope everybody have understood this, or any clarification from anyone. He has not understood. Of course, we'll be doing some questions, some illustrations, so we will be understanding it more deeply. But have you understood? So anybody who has a question here, he can ask me. Otherwise, we'll move forward.
So can you repeat the question?
Kishore, you want to ask a question?
Opportunity.
But your voice is not coming, so just hold on. If anybody is there, you can put your question on a chat line, and Suraksha can, or anyone who's reading, he can just read that thing on the chat line. Okay, because when you speak, there is a lot of echo which is coming. Okay. Okay. So, but just wait. Maybe that will do some questions. Your query will get answered. Okay. Now the last one. Note. Just read this.
Note, note, an individual who does not satisfy both the conditions as mentioned above will be treated as a non-resident in that previous year.
So that means, this is a precursor that, anybody who's not meeting any of the criteria which has been given here, he will be considered as a non-resident. Okay, fine. So again, we'll learn more about it. But if you're not meeting any of the two, both those conditions, not anyone. If you meet any one of the conditions, you are resident. But if you don't meet any of the two conditions, then you are a non-resident. Okay, fine. So non-resident, just read.
Non-resident, an individual who does not satisfy both the conditions as mentioned above will be treated as non-resident in that previous year.
So either you are now you are a resident or you are a non-resident. But of course, there's a third category also, which will just throw some light on that. So by these, this thing, as per this rule, if you meet any one of the condition, then you become a resident. Now we have to determine whether you are a normal resident or resident but not ordinary resident. We'll go further to understand that. But you have to meet either one of the condition. But if you don't meet any of the two conditions, you will be a non-resident. Okay. Okay, so exemptions now.
Exemptions. However, in respect of an Indian citizen and a person of Indian origin who visits India during the year, the period of 60 days as mentioned in 2 above shall be substituted in with 182 days.
Now, this is basically a concession given to people who are settled abroad, who are the persons of Indian origin. Okay, I'll talk about who are the persons of Indian origin shortly. But the persons who are of Indian origin, if they come to India, okay, for this thing, then, who visits India during the year, the period of 60 days, as mentioned too, shall be substituted with 182 days. So they can, come into India and stay for more than 60 days. Still, they will not be qualified as, a resident, because for them it's a concession which has been given by the Income Tax Authority through Government of India, that they can just come in India and stay for more than 60 days, but still, they will not be termed as resident. Okay, so we'll understand that. So it is only for the people who are of Indian origin. Okay.
The similar concession is provided to the Indian citizen who leaves India in any previous year as a crew member or for the purpose of employment outside India.
Now, what happens is that many people they go abroad to work. Okay, so they join the companies there and start. Get settled there. Like my daughter, my son-in-law, and many of your families would be settled outside. Now, for them, there is a concession, similar concession. So when they come back to India, they are people of Indian origin. If they come back to India and stay for 70 days or 80 days, then they can stay without changing their residential status, whatever residential status they were enjoying. So it will not get altered, because for them the 60 days period has been increased to 182 days. Okay, so either you are people of Indian origin or a person who is Indian citizen who leaves India in any of the previous year as a crew member. Suppose you have gone on a ship or you have gone for employment outside, then this concession will be given, and we will be doing some illustrations to understand these exemptions. Okay, person of Indian origin means a person who has ancestors were permanent Indian resident. Okay, like you go abroad, the first generation, the second generation. So you are a person whose ancestors were permanent Indian citizen. So like somebody's sons and daughter, they are settled there, and their sons and daughter come to India, so they will be called permanent persons of Indian origin. Maybe they were born in UK or US or any country, but their parents were of Indian origin. So this concession will be given to them also. Okay. Okay. Read this.
Waters of India, that is 12 nautical miles into the sea from the Indian coastline. Even the stay in a ship or boat moored in the territorial waters of India would be sufficient to make the individual resident in India.
So India has been defined as basically India and including, territorial waters of India, 12 nautical miles within the 12 nautical miles into the sea is considered in India. So even if you are India and you are in a ship which is, not gone beyond 12 nautical miles, so you will be still considered to be in India for counting the purpose of this, number of days. Okay.
It is not necessary that the period of stay must be continuous or active, nor is it essential that the stay should be at the usual place of residence, business or employment of the individual.
So it is not necessary that the period of stay must be continuous or active. Okay. So, or nor it is essential that you should be staying at a usual place of residence or place of your business or employment. You have come to India for a particular number of days and then you have gone back and come to India again the same financial year. So we will be considering all at one this thing. So number of days will be counted. It is not that you have to stay for a continuous period in India or during the last financial year for calculating the residential status. Okay.
For the purpose of counting the number of days stayed in India, both the date of departure as well as the date of arrival are considered to be in India.
So when you left and you came back to India, both will be counted for the purpose that you have stayed in India.
The residence of an individual for income tax purpose has nothing to do with citizenship, place of birth or domicile. An individual can therefore be resident in more countries than one even though he can have only one domicile, place of residence.
So, place of domicile, where you're living, I mean, what kind of citizenship you have, where you were born, that is nothing to do with the residential status, rules as far as India is concerned. Okay. So, exceptions we have already considered, so I'm just repeating them again. Just read.
In the event of an individual who is a citizen of India or person of Indian origin leaves India for employment during a financial year, he will qualify as a resident of India only if he stays in India for 182 days or more.
Huh. Suppose there is an individual who has got a job and is going to leave India for an employment outside. If he has stayed for more than 182 days in India before leaving, in that very year, he will be still considered as a resident. But if he has suppose stayed for 181 days and then left out of India, then he will be considered as non-resident. So we'll understand that. Okay.
Person being a citizen of India who leaves India in any financial year as a member of the crew of an Indian ship as defined in clause 18 of section 3 of the Merchant Shipping Act 1958, 44 of 1958 or the above condition of 60 days gets extended to 182 days.
So basically, particularly, I mean, just forgetting the, the crew member, which is not so important for all of us, unless you are basically a person who is, it travels more of a ship or you are a crew member. So most of us not. So we're going to discuss that. So, if you are going to leave India, for example, suppose after finishing your studies, you're leaving India and, you're getting a job there. So if you have stayed for 180 days in India, then your status will change immediately for that previous year because then you're going to spend more than 182 days outside India. Okay, so the above condition of 60 days, which was there in the sixth one, so that gets extended to 182 days. Okay.
Such individuals are allowed a longer time greater than 60 days and less than 182 days to stay in India.
Okay, so I'll just give you an example, before we go any further. We'll just go to a question. Okay. Okay, just read this.
Mr. Ram, an Indian citizen, left India on 22nd September 2023 for the first time to work as an officer of a company in Germany. Determine the residential status of Ram for the assessment year 2024 to 2025.
Okay, so he has left on 22nd of September. Okay, read this.
During the previous year 2023 to 2024, Mr. Ram, an Indian citizen, was in India for 175 days only. That is 30 plus 31 plus 30 plus 31 plus 31 plus 22 days. Thereafter, he left India for employment purposes.
So how we have calculated, basically we are looking from 22nd, from 1st April till 22nd of September. So we have April, May, June, July, August, and September, 6 months. Okay. So for the 5 months it was 30, 31, 3, 30, 31, 31. So these are the five, and September he remained there for 22 days. So there, that means he was there in India only for 175 days. Okay.
Since he does not satisfy the minimum criteria of 182 days stay in India during the relevant previous year, he is a non-resident for the counting year 2024 to 2025.
Okay, so he will be considered as a non-resident for the assessment year, uh, uh, this thing, 2024-25. Okay, okay. So, what I have done is that I have made an Excel sheet also. If you can just see, can you see this Excel sheet?
Yes, sir.
Okay, so the same question, okay, sorry, I'll just go to this. Just read this question again.
Mr. Ram, an Indian citizen, left India on 22nd September 2023 for the first time to work as an officer of a company in Germany. Determine the residential status of Ram for the assessment year 2024 to 2025. During the previous year 2023 to 2024, Mr. Ram, an Indian citizen, was in India for 175 days only. That is 30 plus 31 plus 30 plus 31 plus 31 plus 22 days. Thereafter, he left India for employment purposes. Since he does not satisfy the minimum criteria of 182 days stay in India during the relevant previous year, he is a non-resident for the assessment year 2024 to 2025.
Okay. Now, if you just, I'll just take you to the law again. So you put the date, okay? From 1st April 2023. This was the starting year of the financial year, and he left India on 22nd of September 2023. So I put both the dates, okay? This is, the date of start of financial year, okay? And this is the time when he left India, okay? I have not put that, but we can put also that. So this is, and then we put our, this thing, then we just put a plus sign and say days, okay? And then we just, take the end date, okay? And the start date, okay? And then close the bracket plus 1, okay? So we'll have 175 because, this day counts, it excludes one day, okay? The day of 22nd, the formula. So that's why we had to add, because income tax includes both the days of, leaving, days of, for the start of the financial year and at the end when you are basically, leaving India, okay? So you will get if you're using an Excel sheet, okay? Because I plan to give some questions to you where you have to solve them through using Excel sheet. So you can always, instead of calculating these number days, you can do it. Now let's go back to understand, why this person is a non-resident Indian. Okay, so let's see rule 6.1. Okay. Now, read this rule 6.1. The taxpayer would qualify as a resident of India if he satisfies any of the two conditions. Stays in India for a year is 182 days or more. Now, tell me in the example which was there, the guy what is his name? Ram. Ram has stayed for India for 182 days? Yes or no? How many days he
No,
stayed?
sir.
How many days he stayed? 175 days.
One side.
So the condition number one is not satisfied. Number two, stays in India for immediately preceding preceding year is 365 days or more, and 60 days or more in the relevant financial year. Maybe that he might have stayed for 365 days, but has he stayed for more than 60 days in India? Well, yes, but this 60 days has been increased to 182 days because of the exception. So is clause B applicable to Ram? Normally, he would have been a normal one, then 60 days period. But he is a person who is leaving India for joining an employment. So the 60 days period has become now 182 days to calculate his status. So tell me that, this Ram has, I mean, met the condition number B or not?
No,
No,
sir.
sir.
No.
No,
So
sir.
that means neither he has met A nor he has met B. So he becomes a non-resident. So individual who does not satisfy both the conditions as mentioned above will be treated as a non-resident in that previous year. Is that clear? Any doubt? Suraksha, Kishore, Tejasvi?
Sir, I did not get the point B since the starting.
Okay. Now, what happens is that a person has to meet both the conditions to become a resident. Okay. So he has to stay for 182 days or more in India. Okay. Number one. Okay. Like, we are all stayed for more than 182 days in India. So we are all resident by the condition. So I have to satisfy only one. So for all of us who are present today in the meeting, we are all resident by because we have met the condition A. Okay. Now there is a second condition B also. So here it says that if you have stayed for more than 60 days in India and also at the same time you have stayed for 365 days in the 4 preceding financial years, then you will be considered as a resident. Okay. Now in case of a Ram who has spent only 175 days in the previous financial year, so that means he doesn't meet the condition number A. Okay. Is that clear, Suraksha?
Yes, sir.
And now if you move to the second condition, he has stayed for 175 days, which is more than 60 days, okay? So if there would be no exception, then he would have qualified to be a resident of India. But the persons, there is an exception that anybody who has got an employment, if you look at this exemption, okay, just read this. In the event, an individual who is a citizen of India or a person of Indian origin leaves India for employment during financial year, he will qualify as a resident of India only if he stays in India for 182 days or more. Okay. So if you have got a job and you're leaving India, then the 60 days has been substituted for 182 days. So going back to this, uh, now in this case, the Ram has stayed for 175 days. Okay, if you have not been living for Germany, if you had not gone a job got a job, then he would have been resident. Okay, but since he has got a letter appointment, he got job for doing in Germany. So the 60 days will get substituted to 182 days, and he will become a non-resident. So that means whatever income he's going to earn in England, he doesn't have to pay any tax in India. So we're going to learn soon about that. Okay.
Okay, sir.
But was he, suppose, he would have stayed for more than 82 days, then his income in England would have also been taxed in India or Germany, wherever he was going. Okay.
Okay. Okay, sir.
Is that clear to everyone? Any doubt anywhere?
Sir, I just wanted to know that this condition, this exception is available for only individuals who are going for employment purpose.
Absolutely. Or a crew member for two people, two sets of
Oh,
people. One for people who are leaving for India for a job, or the person who is a crew member who is going by ship to someone as a crew member. Okay. Fine.
okay. Okay, sir.
Okay. So this is very important. When my daughter left India, so in that very year she had stayed for less than 182 days. So we found that she was a non-resident. She was doing a job there. So when we were filing his return, so we didn't have to show the income which is returned in India, in England, which was not taxable in India. So she earned some pounds in England, so which was not taxable in India. Okay, fine. Is that clear? Okay. So these were the exceptions. Okay. 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 Now read this.
However, from the financial year 2020 to 2021, the period is reduced to 120 days or more for such an individual whose total income other than foreign sources exceeds rupees 15 lakh.
Now this is, there's another amendment which happened, a couple of years back that 180 days, becomes 120 days for the people who are living in India for, basically for taking a job outside or as a crew member. But if they're having an India income of more than 15 lakhs, suppose you are going to Germany or any place and you are not having any employment in India, then of course this clause will not become applicable. But suppose you are working in India and your income was more than 15 lakhs in India, and then you were living abroad, okay, so then that case, the period of 182 days become 120 days. Okay, is that clear? Suppose I am just saying that, suppose, you got a job outside, okay, and you are working in India, and you have already, before leaving, you have already earned about 20 lakh rupees, okay, and then the days will be counted that you have to, the days will be 120 days or more. If he has stayed for more than 120 days or more, then only he will be considered as a resident. Otherwise, he will be considered as a non-resident.
So this is an amendment to the exception.
Amendment to the exception only in case, basically, there were a lot of people. Why this amendment was brought? Because there were many people who were earning in India. They left for job outside. So, they thought they were non-resident and they didn't file any income tax return in India. They have already earned about, 15 lakh rupees in India or more than that. So, this was only included for those people who have, the period of 182 days was brought to 120 days for them. To remind them, they have to file their tax return. This is just a exception. Okay, fine. Okay. Now the last one. Read this.
Section 61A. In another significant amendment from financial year 2020 to 2021, an individual who is a citizen of India who is not liable to tax in any other country will be deemed to be a resident in India. The condition for deemed residential status applies only if the total income other than foreign sources exceeds rupees 15 lakh and nil taxable liability in another countries or territories by reason of his domicile or residence or any other criteria of similar nature.
Now, this was, yet another amendment which has happened in 2021. There are certain people who are of Indian citizens who didn't have any tax liability in any other country, because they will constantly moving from one country to another. So in no country they will become a resident of that country. Okay, so if there was no tax liability, okay, and there was no, they were not paying any in any other country, they will be considered as deemed to be resident in India. Now, this condition will be only applicable if their income in India exceeds more than 15 lakhs and there is a nil tax liability in any other country. Okay, so this, if that is the situation, then you will be considered as a deemed resident of India. Basically, this was to plug a loophole because there were many people, to avoid, kind of any tax liability in any country. They will be keep moving from one country to another after a few days, so that there is, they will not become, a resident of that country, so they don't have to pay any tax. I mean, of course, if that situation arises. So to plug that, the government of India brought this rule that if your income in India is more than 15 lakhs and you have not paid any tax anywhere in the world, then you will be considered as a deemed resident of India. Okay, so this was just a plugging of a kind of, people who are taking the advantage of the rules which were framed by government of India. Is that okay? So anyway, I mean, it's you can just go through and read them. So if there is still any doubt, you can ask me. Okay, non-resident.
Non-resident. An individual satisfying neither of the conditions stated in A or B above would be an non-resident for the year, section 6.1.
So we have seen the section 6.1. If you don't meet any of the both the conditions, then you will be a non-resident. So this is the same 6.1 which we did at the beginning. So this one. So maybe it is getting repeated here. I should have deleted this slide because we have already covered. Okay. So if you're not meeting either A and B, both of them, then you are considered as a non-resident. Okay. So this is the same thing which is there. It gets repeated here. Okay. Fine. So the ideally would be that I can just delete it so that there is no confusion again. Okay. So I can just, even delete it because we have already covered that. So I am just deleting because this is just a, confusion slide which is coming again. Okay. Fine. So let's go to now. So we have done deemed resident. Now section 6 oblique subsection 6, resident but not ordinary resident. So we haven't touched so far that, when you become resident but not ordinary resident. So read this.
If an individual qualifies as a resident, the next step is to determine if he or she is a resident, ordinarily resident, ROR, or an RNOR.
So, what we have seen so far, that we have seen two categories, resident and non-resident. Okay. If you don't meet any of the condition in the sixth one, then you are a non-resident. But if you meet any of the one condition, you become a resident. But then that is not a complete picture, because if you have become resident, the next step would be to find out whether you are a normal resident or a resident but not ordinary resident. So a normal resident is called ROR, and a person who is not ordinary resident is called RNOR. So you must have a distinction with the two, and then you will understand what is the meaning and what is the significance and how it affects your tax liability.
He will be a ROR if he meets both of the following conditions.
So now we are going to understand two more conditions. If if he meets both the conditions, then he becomes a resident, ordinary resident of India.
First, has been a resident of India in at least 2 out of 10 years immediately previous years, and second, has stayed in India for at least 730 days in 7 immediately preceding years. Therefore, if any individual fails to satisfy even one of the above conditions, he would be an RNOR.
So that means, they have two more categories now. One is called normal resident, which is, ROR, and the second one is called RNOR, resident but not ordinary resident. So to become a resident of India, he has to meet both the conditions, that he has been resident of India in at least 2 of the 10 previous years. So resident means that you have met, the condition which are there in sixth one. So if you have met any one of the condition, you will be called as resident. Okay. So you, if you have met 2 out of the 10 years in the previous financial years, then you have to meet this condition. Second condition you have to meet is that you have to be there in India for 730 days in the 7 immediately preceding years. So if you meet both the conditions, you become a normal resident of India. If you don't, then if you even breach any one of the condition, you will become a RNOR. Therefore, if any individual fails to satisfy any one of the above conditions, he would be resident but not ordinary resident. So let's understand this through an example. Okay, let's go to an example. Now, before that, let's see the taxability. Just read this.
Taxability. Resident. A resident will be charged to tax in India on his global income, that is, income earned in India as well as income earned outside India.
Okay, so that
And
means, just hold on. So that means if you are a resident, okay, then all your global income will be taxed, in India. A resident will be charged to tax in India on his global income. Whether you make any income outside or India, you will be taxed in India. If you are resident, if you are earning some money abroad, some money in India, you have to pay all your tax in India. But
NR and RNOR, their tax liability in India is restricted to the income they earn in India. They need not pay any tax in India on their foreign income.
so if you are a normal resident, then all your global income will be taxed in India. But if you are a non-resident, or if you are a resident but not ordinary resident, then your only Indian income will be taxed in India, and all your income which you are earning abroad will not be taxed in India. So their tax liability in India is restricted to income they earn in India. They need not pay any tax in India on their foreign income. Okay, so let's understand this through example. Just read this.
Brett Lee, an Australian cricket player, visits India for 100 days in every financial year. This has been his practice for the past 10 financial years. Find out his residential status for the assessment year 2024-2025.
Okay, so now this is a cricketer who comes for to India quite often, and he comes now for quite often for IPL as well as when he was playing for Australia. So he spends India almost like 100 days in every year in the financial year, and this has been the practice for the last 10 years. Okay, so now first of all, so what is the period of stay during the previous year? Read this.
Period of stay during previous year 2023 to 2024 is equals to 100 days.
100 days. Okay.
Calculation of period of stay during 4 preceding previous years That is 100 into 4 is equals to 400 days.
So in the previous year, he has stayed for 100 days. In the years prior to the, previous year, he has again stayed for 400 days. So we can know, from 22, from 19, 20, 21, 23. So these are the previous, years, okay. So the calculation of the period of stay during the preceding previous year. So the previous year is 23, 24. So if we ignore this and look for prior to this year for 4 years, we find that he has stayed for 400 days. Okay.
Mr. Brett Lee has been in India for a period more than 60 days during previous year 2023 to 2024 and for a period of more than 365 days during the 4 immediately preceding previous years. Therefore, since he satisfies one of the basic conditions under section 6.1, he is a resident for the assessment year 2024 to 2025.
So is that clear? Because, if we count, he has stayed for more than 60 days in the last year. Of course, here the exception will not play because he is not an Indian citizen going abroad for working. So the 60 days will remain 60 days. So he is already there for 100 days. And during the last 4 financial years, preceding years, he was there in India for 400 days. So that means he becomes a resident of India for the assessment year 2024-25. Now he has become resident. So let's see whether he is an ordinary resident or not ordinary resident.
Computation of period of stay during 7 preceding previous years is equals to 100 into 7, that is 700 days.
So, in the last 7 years, preceding years, he was there for 700. Okay.
Since his period of stay in India during the past 7 previous years is less than 730 days, he is not ordinarily resident during the assessment year 2024-2025. Therefore, Mr. Brett Lee is a resident but not ordinarily resident during the previous year 2023-24 relevant to the assessment year 2024-25.
So, which means that, if you look at the second clause, that he has stayed for, in the India during the last 7 years. So he was there for 730 days. He is not an ordinary resident. Okay, fine. So we have seen that there was a condition here. Let's go back to the condition here. So let's see this condition that he was a resident 2 out of this thing. And then he stayed in India for at least 730 days in the 7 preceding. So that means therefore, if any individual assessee satisfy even one of the conditions, he would be R and no R. So he is satisfied the condition number 2. Okay, fine. So which means that, he is a person who is resident but not ordinary resident. Fine. क्लास लेक्चर में ले रहा हूँ अभी ना. Okay. He will be liable to tax in India on his Indian income only. Is that clear? Just read through. Is that okay? Yeah. So I'm just going to run through this example again and just go by one. So Suraksha, can you read now? Or have you all followed? I mean, anyone can read who has some doubt about it, okay?
Example: Bradley, an Australian cricket player, visits India for 100 days in every financial year. This has been his practice for past 10 financial years. Find out his residential status for the assessment year 2024 to 2025.
Okay, so we have to find out, what he is, whether he is resident, non-resident, or resident but not ordinary resident. Okay, so whether he is an ordinary resident, not ordinary resident, or non-resident. So there are 3 kinds of status which are possible. Okay, so period of stay during the previous year was how much, Suraksha?
100 days.
Okay, so that means he was there for 100 days. Okay, fine.
And calculation of period of stay during 4 preceding previous years were 400 days.
So that means he has stayed for 400 days during the previous year. He stayed for 100 days, and prior to the previous year, for the last, this thing, he has stayed for 400 days. Okay, so we have calculated like this. Okay, read this.
Mr. Brett Lee has been in India for the period of more than 60 days during previous year 2023-24 and for the period of more than 365 days during the 4 immediately preceding previous years. Therefore, since he satisfies one of the basic conditions under Section 6(1), he is a resident for the assessment year 2024 to 25.
Okay, so he becomes resident. Okay, so now he has become resident. So is that okay? Have you found that he's become a resident? But we have to find out whether he has become an ordinary resident or not ordinary resident. Okay, fine. Is
So,
this clear, Suraksha, to all
yes.
of you? Huh? Is it clear? Okay. So then,
Computation of residential status of Bradley. Computation of period of stay during 7 preceding previous years was 700 days.
okay, now we are looking at, the rule 6, subsection 2. There are two clauses, 6(1) and 6(2). So we are looking at the 6(2)(1). Okay, it's 6(2) or what? Let's go back. So we are actually, examining 6(6). Sorry. So it is 6(6), section 6(6). Okay, which tells you a person whether he is a non-resident or resident. Okay. So what are the rules here? Can you read this?
If an individual qualifies as a resident, the next step is to determine if he or she is a resident ordinarily resident or an RNOR. He will be a ROR if he meets both the following conditions. First, has been a resident of India in at least 2 out of 10 years immediately previous years, and second, he has stayed in India for at least the 730 days in 7 immediately preceding years. Therefore, if any individual fails to satisfy even one of the above condition, he would be an RNOR.
So let's examine, whether he is a resident or normal resident or not. So when we go back to this case, we find that he was not meeting the criteria of this one. Okay, because in the last 7 years, he has stayed for only 700 days, whereas he should have stayed for more than 730 days. Okay, read this.
Since his period of stay in India during the past 7 previous years is less than 730 days, he is not ordinarily resident during the assessment year 2024 to 25. Therefore, Mr. Bradley is a resident but not ordinarily resident during the previous year 2023-24 relevant to assessment year 2024-25. He is liable for tax in India on his Indian income only.
So that means whatever money he is earning in India, he has to pay tax only on that. But whatever money he is earning in Australia, it will not be brought to tax in India. Okay, so he has to pay only tax for the money which he is earning in India. Suppose he was resident, then he has to pay even for the Australian income what he is earning there, and he has to pay tax in India. Okay, so here, since he has made sure that he is going to pay tax only for the Indian income, so he's become a resident, but not only resident. He's only paying for the tax which he's going to earn, or the income which he's going to earn in India, and not what he's going to earn in Australia. Is this clear?
Yes, sir.
Okay. So let's just a little bit more, and then we may have some, So this we have done. Okay. So this we have covered. Okay. Just read this.
Also note that in a case of double taxation of income, where the same income is getting taxed in India as well as abroad, one may resort to double taxation avoidance agreement, DTAA, that India would have entered into with the other country in order to eliminate the possibility of paying taxes twice.
Now, it may happen that, for example, have to pay, like, for example, in the case of Brett Lee, suppose he was a normal resident, okay? Suppose, he have qualified both the conditions which are given under section 6(6). So he would have become a resident in India, and his both global income will be taxed in India. Income which is earning in India, income which is earning in Australia would have become taxable in India. Now, since he is filing his income tax return for whatever money he is earning in Australia and paying taxes there, so, then we have to look at that whether India has a double taxation avoidance agreement with Australia. If we have that, then, he can cite that and claim, a double taxation avoidance agreement and pay tax only for his Indian income in India, and then he can be exempt from whatever money he is earning in Australia. So, to avoid such kind of an event, if a person has to pay tax both in his country of origin as well as the country where he is resident, like in India. So if we have a double taxation avoidance, agreement, DTAA, which is called, then he can take the benefit under DTTA to exclude his foreign income to be taxed in India. Okay, so that is this thing. This we have already done. So one more question. Okay, read this. One or two more questions. Read this.
Mr. B, a Canadian citizen, comes to India for the first time during previous year 2019-2020. During the financial years 1920, 2021, 21 to 22, 22 to 23, 23 to 24. He was in India for 55 days, 60 days, 90 days, 150 days, 70 days respectively. Determine his residential status for assessment year 2024 to 25.
Okay, so this is given. Okay, so during the previous year, read this.
During the previous year, 2023 to 24, Mr. B was in India for 70 days, and during the 4 years preceding the previous years, 23-24, he was in India for 355 days, 55 plus 60 plus 90 for 150 days. He does not satisfy the basic condition under the section 6.1. Therefore, he is a non-resident for previous year 23-24.
Okay, so now, just I'm going to take you to the Excel sheet where I have done these calculations again. Okay, so let's go here. So this is Mr. B, who is a Canadian citizen who come to India for the first time in, in 1920, during the financial year 1919, he has stayed for these many years. Okay, so that means, these are the years. Okay, so this is the previous year, and these are the years prior to the previous years. So if you look at, see that in India he was there, cumulative will be like 50 days, and the last year it was 70 days. So during the previous year he was in India for 70 days, and during the 4 preceding years he was there in India for 350 days. So so the rule says the taxpayer would qualify as a resident of India if he satisfies any of the one of the following 2 conditions. He was in for India for 180 days or more. No, he was not there. Second, that he is there, in India for 365 days preceding 4 financial years and 60 days or more in the relevant previous year. So if you look at this thing, so it has to be 365, but he was there for only 355 days. So he is not meeting. Stay in India for immediately preceding 4 financial years, 365 days or more, and 60 days or more in the relevant year. So he is there. He was there for India for 70 days, but he could not qualify because he has stayed less than 10 days to attract the condition number B. So neither condition number A nor condition number B is applicable to him. So he is a non-resident. Is that clear? Should I explain again?
No, sir, it's clear.
So just to again recap, both the conditions should be met. Any one of the 2 conditions should be met. 182 days or more? No, because he has stayed for only 70 days. Now, if you examine the condition number B, where he has to be there in India for 365 days or more in the preceding financial years. Okay, in the preceding financial years, ignoring only the previous year, so he was there only for 355 days. In the previous year, he was there for 70 days. So let's see the condition number B. Stay in India for immediately 4 preceding years is 365 days or more and 60 days or more in the relevant financial year. So he is not meeting though of course he was there more than 60 days in India, but not more than 365 days in the preceding 4 financial years. So in that case, he is a non-resident. Is that clear? Okay. So one more question and then we'll go for a break. So this we have already done. Okay. Okay, just read this.
Mr. Day, a non-resident residing in US since 1991, came back to India on 1st April 2022 for permanent settlement. What will be his residential status for assessment year 24-25?
So Mr. Day was a non-resident, okay, residing in US since 1991. Came back to India in the year on 1st April 2022. Okay, he was staying in US since 1991. So first time he came to India in on 1st of April 2022 for permanent settlement, what will be his residential status for the assessment year 2024-25, which is the year which is now the assessment year? Okay, read this.
Mr. Day is a resident in assessment year 24-25 since he stayed in India for a period of 365 days, more than 182 days during previous year 23-24.
So now, since he has come back to India, he came right on 1st April 2022. So he has stayed for 1 full year in India. Okay. So he has satisfied one of the conditions under 6(1). Okay. So he is a resident. Itna. Okay. Okay. Sorry. So now we have to examine his, rule 6(6). Okay. Just read this.
If an individual qualifies as a resident, the next step is to determine if he or she is a resident, ordinarily resident, or RNOR. He will be an ROR if he meets both the following conditions. Has been a resident in India for at least 2 out of 10 years immediately previous years, and second, he stayed in India for at least 730 days in immediately preceding years. Therefore, an individual who fails to
Yeah.
Therefore, if any individual fails to satisfy even one of the above conditions, he would be an RNOR.
Okay. So let's see in this case.
For the previous year 23-24, assessment year 24-25, his status would be resident but not ordinarily resident, since he was not resident in 9 out of 10 previous years immediately preceding the previous year 23-24. He can be resident but not ordinarily resident also due to the fact that he has stayed in India only for 365 days, that is less than 730 days in 7 previous years immediately preceding the previous year 23-24.
So basically, if you look at the second condition, he just came last year only. So he's not meeting any of the conditions under Rule 6(6), which says that, he has to be at least for 2 years, he has to be this thing, and he has to stay for at least 730 days in the preceding 7 financial years. So he came for the first time. So he's not meeting any of the, even one of the conditions doesn't meet, he will be regarded as a non-resident. So if you look at now, this guy has, if you look at the question here, he's coming to India on 1st April 2022 after 1991. So, and he has not visited India during this period. So he is not meeting the second criteria, which is under Rule 6(6). So though he become a resident, but he is a resident but not ordinary resident for this year. Okay. Fine. So from this he becomes a resident. But the next step is whether he is a non-resident. So since he came for the first time, so he is not meeting any of the conditions under 6(6). So he is a resident but not ordinary resident. Is that clear? Is that clear? So we are heading for a break now. It's 11. So we'll be meeting at 11:20 now. Okay. So if anybody has a doubt, is it clear to everyone? Kajal?
Yes, sir.
Yes, sir.
Of course, I have recorded this, so you can. I'll just share the recording also. Sanchit, are you there?
Yes, sir.
And okay, Diya, Pratishtha, Suraksha. Okay.
Yes, sir. Yes, sir.
Okay, fine. So we'll meet at 11:20. Fine.
Okay, sir.
Okay, sir.